Hello and welcome to IB Times TV. I'm Marisa Christian. Today I'm here with Moran Zhang to talk about China's upcoming economic statistics. Now, second quarter GDP results are out on July 15th. What can we expect to see on the 15th, and why are these figures significant?
Okay, so first of all, everyone's looking at China is because China is the second largest economy right now. It's one of the biggest trading partners of many large economies, and many multinationals. A large chunk of their revenue really depends on the Chinese market. So if China sneezes, it's very contagious. And the street consensus is saying that the slowdown, the China slowdown story that we've been hearing so much is going to continue. So China recorded its lowest GDP, annual GDP last year. It's like it's a 13-year low. It's like 7.8%. And last quarter, in the first quarter, it was 7.7%. So for this quarter, people are thinking about around 7.5.
Why can't China maintain its double-digit growth?
Well, that's a good question. Mathematically, it's very hard because China is growing so fast. It's now half of the size of the U.S. economy, is around 7.5 trillion U.S. dollars, and it's also half the size of the EU. So, and OECD earlier this year, they've issued a report saying that maybe by 2016, not too far ahead, China would surpass the U.S. and become, the largest economy in the world. So when you have an expanding denominator, it's really hard for you to keep that pace of growth. However, it's not to say that China is not growing really fast and China can't grow that fast. If China really wants to, it has enough ammunition. However, the government is sort of thinking that they need to balance the quality of growth and just not focus, solely focusing on the speed. So they're sort of government-induced slowdown, if you can put it that way.
How much should we really put into these GDP results?
There has been a lot of concern over the reliability of these results. For example, for last quarter, the national GDP is 7.7, as I said. However, for this quarter as well, by the end of the quarter, the month, we'll get the statistics for the 13 different provinces. And for last quarter, none of these provinces claimed a GDP that's lower than the average, which defies the laws of the averages, because you can't have all the numbers that are above average and get an average that's lower than every single number. So that really puts the reliability of the data into question. So it'll be very interesting to see by the end of this month if this happens again. As a matter of fact, over this weekend, President Xi Jinping actually announced that he's no longer going to judge the local government's performance based on their record of boosting up the economy.
What are your forecasts for other indicators coming up over the next few weeks?
Okay, I'm going to talk about bank lending, exports, and inflation. Those are the major ones. For bank lending, we really don't know where it's going to be. It could be around the same level as we've seen in May, but because we had a really large surge in the first half of the month and then had a credit crunch and a pullback in the second half, so you can't really tell. But for inflation, I think that inflation really fell back in May because of a drop in vegetable prices. However, that prices have stabilized over the past couple of weeks, and then we had a surge in pork prices, and Chinese people like to eat pork. So inflation is going to spike back. However, we think that it's still going to stay below the 4% government target. So the central bank still has some room to maneuver if it wants to. And then for exports, we think that we're going to see a true pace because, well, in May, exports slumped because the May of last year is where the comparison, the base number, was unusually strong. But the trend sort of reverted to the usual trend in June, so we're getting away from that very unfavorable base effect for June. So I think that it'll return to a normal pace, and it should be around 6% for May.
Very informative, Moran. Thank you for joining us.
All right, thank you for having me. Thank you.